Wow.
That is pretty wow. Absolutely. What a pity if you are on radio. In the meantime, why don't we take a look at what's happening with Tesla, because it is down over 5% today ahead of earnings after the bell. Well, the stock is nonetheless the best performer on the NASDAQ 100 so far this year, up nearly 300% year to date. Let's get straight to Josh Lipton, because we really want to know what exactly we need to listen out for in this earnings report. Joshy?
Yeah, Mandy, it's the best performing auto stock this year by a long shot. Tesla now up some 300%, scheduled to report results after the close today. Last quarter, the first time Tesla posted a profit. Analysts do not expect to hear the same. Street now looking for a loss of 17 cents on revenue of $383 million. A bit of history here. Tesla has missed EPS estimates in 7 of the last 8 quarters, missed revenue in 5 of the past 8. Last quarter, stock jumped 24% after beating estimates. The focus for investors today, one, is the company still on track with its goal to deliver 21,000 Model S sedans this year? What, if any, production ramp-up is scheduled through this year and into next? And what is the take rate on leases for the Model S, greater or less than expected? For their part, analysts at Barclays saying the next key debate around Tesla should be around the gross margin development. Remember, on that first quarter call, management said expected to reach a 25% gross margin in the fourth quarter. Brian, back to you.
Josh, thank you very much. All right, let us bring in Mr. Herb Greenberg here, probably owns multiple Teslas, and Andrea James from Dougherty Company. Andrea, we are going to talk about 3 stocks that you cover, all reporting earnings this week. Let us begin with Tesla. You've got a buy rating on it. Our viewers who have seen you on this program before know you are pretty bullish on the name. It's down 4.5% today going into earnings. What can we read into that, if anything?
People might be a little bit concerned about, sort of the gap revenue accounting optics, just because Tesla will be deferring so much revenue. But really, what you would read into it is that there's probably some profit taking after a really nice run.
Mm-hmm. You know, I'm really interested in where Tesla goes from here. I mean, obviously, it's done extremely well so far this year, and its earnings will have to be pretty good to try and back that performance up. So in terms of its growth, is it going to come domestically? Is it going to come from other opportunities, like, for example, China?
That's a great question. You know, China, as Elon Musk has said, is a little bit of a wild card. I think ultimately Tesla expects 1/3 of their demand to come from North America, 1/3 from Asia, and 1/3 from Europe. Ultimately, though, this company is a market share play on the $1.5 trillion global auto market.
But hey, Angela, this is Andrea. Excuse me. This is Herb. You know, when we look at this company and we look at the profits or lack thereof, or whatever they're going to be, last quarter clearly the stock got the pop after they reported the profit. This quarter, that people don't expect a profit. Whatever they have is low quality. Why should we not care about the quality of the numbers they're reporting?
Simply because the GAAP profitability does not reflect what's actually going on with the company. They have to defer a lot of money. So say they sell a $100,000 car, they're only going to be able to recognize maybe 4% of that revenue in the quarter. The rest of it they're going to have to defer. So what investors are going to have to do is look below the GAAP numbers to look at what's actually going on with the cash flow to actually find out.
How long do you cut them that slack on a company like this?
Well, you know, the cash flow statement will reflect, you know, what's going on with the company. So, I mean, as long as they are selling the units, how much they recognize on revenue, I mean, it's just GAAP accounting optics, honestly. So I think that investors will just want to look at future potential earnings potential, maybe 10% on the operating margin line, and ultimately 25% on the gross margin line.
Let's take a look at the next stock we've got on our list, and that is DigitalGlobe. They take the wonderful pictures that make things like Google Earth. You've got a buy rating. It's already up 33% year to date. Why do we care about this stock?
You know, I love this company. I think it's really interesting. We take for granted that we can just see satellite pictures of the Earth. But the truth is that for most of the last century, this capability either didn't exist or you had to have like a top secret security clearance to see it. There are growing verticals of demand for satellite imagery, telecommunications, oil and gas, search engines. So it's a growing market and there's high barriers to entry, and this is the dominant player in the market.
It used to be top secret, now it's a public company. Who is their investment bank, the NSA?
Well, hey, Andrea, you know, but we look at the thing, gross margins are falling. The company's organic growth at 10% last quarter, and people are saying, and the company comes out and says, but you know, by the way, we're not going to be able to break out organic growth from acquired growth, that's always a red flag. I mean, why? Gross margins falling. Concern you?
So right now, DigitalGlobe is in the middle of a really messy merger with its big competitor, GOI. So basically, there were two companies a year ago, and January 31st, they merged together. And so most of this year is about integrating those two companies to become the dominant satellite imagery provider in the world. So what will happen is, as this year goes by, then we'll start to look to 2014. The back half of 2014 is when things will really start to normalize. That's where you kind of have to look toward to value the stock, and 2015 and beyond.
And last but certainly not least is Stratasys, 3D printing company. What is it? Why do you have a neutral on it?
Yeah, so Stratasys is a best-in-class solution on 3D printing. To get smart about 3D printing, you sort of have to separate, I'd say, the consumer market, which is printers that cost from $1,000 to $5,000, to the industrial professional market. Those are printers anywhere from $10,000 to $600,000. Stratasys just merged in the last year with a competitor called Object, created a new, big, wonderful company. It's trading at about 35 times next year's earnings estimate, so a lot of the goodness, I believe, is priced in. However, I think it's a good company, well run, and also a growing end market.
Andrea James, really appreciate your time. Thank you so much for joining us.
Yeah.
Guys, two quick notes on 3D printing. Number one, you know my view. I think it's going to be the biggest, fastest growth industry in the next 20 years in the United States, unfortunately, because I think it's going to put a lot of people out of work.
Right.
Goldman Sachs, thank you to our markets desk, just gave me this. Goldman Sachs just put out a note highlighting what they call creative destruction trends.